Good morning, everyone. Welcome to the European Crossover webinar. And we did just get these Eurozone market services final PMI numbers. Came in at 48.8, was expected 48.1 earlier. We got the French numbers coming in a little bit better than expected. German came in pretty much in line, and Italian GDP just a tad bit weaker. And at the bottom of the hour, we'll get the UK data. Same thing also, market services PMI. And then at the top of this next hour, we'll get Eurozone producer prices. Coming into today, let's see, we'll have ADP numbers as well as Canadian building permits and market composite, market services PMI final in the States, as well as ISM non-manufacturing here in the States. Taking a look at where we stand, we did see the euro dollar going to get a nice little rebound yesterday. Are seeing interest rates, 10-year note futures come off a little bit here. And euro dollar, let's see, made it up here to 21.08. And we actually have our bias chart resistance, I believe, today at 21.07. And cable, a little bit flattish at the moment. There we go. And your dollar made up to that. And I believe our resistance today is at 21.07. And we can take a quick look. Oh, actually, we gave a little bit more room. 21.19. Oh, okay. 21.07 was the number here, but I gave it a little bit more room to allow up to 21.19. So came up shy of that. Dollar CAD still a little bit weaker, and dollar index overall. It actually paired back yesterday. As I told you, just not expecting much of this dollar. So it came up a little bit. We did see indices come off late in the day yesterday. And they've been kind of all over the place. Let's move into that screen. And here we are. Still have the profile here. It just makes it a little bit easier if I can just have the 5-minute and the 30-minute at the same time. But I still have the profile here. As you can see here, we actually had a pretty good rally off of that, and we actually made it in here into the POC yesterday, or yesterday's POC, which was 31.79. Let's see here. Let's see why that's repeating itself, but one moment. But you can see here, we rallied up in here to 31.70, and at least right here is 31.79. And also we had the one from the day before at 32.03. So came in here, we paired back a bit from here. We'll kind of find a little bit of support here on this dip at 31.55. And you can see the volume picking up. So it makes it a little bit easier for me, myself, like I said, where I can just have the 5-minute there instead of flipping back and forth. But a pretty good little pair back from where we were yesterday. We were really kind of sloppy, and for some reason, towards the end of the day, we really started to shed off quite a bit, despite the fact that interest rates were, on their lows for the day. We're coming up a little bit here. So we'll see what goes and happens. Taking a look at the S&Ps. Same thing, a little bit of a rebound off of those lows too. Not sure why that's not popping up. Let's go on and move into the news. So the dollar slips as bond yields drop and investor sentiment strengthens. The US dollar fell on Wednesday as investor sentiment improved and government bond yields extend their retreat, with the commodity-linked currencies such as the Aussie and Canadian dollars rose. The lower US bond yields also sapped some of the dollar's appeal among low-yielding currencies, with yen and Swiss francs recovering from the multi-lows overnight. Bonds have been the center of a storm in markets in recent weeks following a jump in yields globally. Investors were betting an economic recovery would hit inflation and lead central banks to normalize monetary policy as economies recover from the COVID pandemic. But this week has seen some calm return to the storm to the market, with yields dropped in, stocks rising. An index of the dollar against the six currencies has dropped back from a nearly 1 month high overnight. Analysts said they expected Jerome Powell to reiterate on Thursday recent comments from fellow policymakers that any rise would be gradual. The Fed is rightly more concerned about the speed of the move rather than the move higher in yields. The comment should help to dampen volatility in the bond market and the US dollar's upward movement. The Aussie fell to 78.28, building on gains of about 7/10 from the previous 2 days, and the Norwegian crown, another commodity currency, traded mostly higher against the dollar. The euro was little changed at 20.86 after rising in the previous session when it rebounded to almost 1 month lows at 120. ECB member Fabiola Pineda said the bloc's monetary authority said the expanded bond purchases or even increase of the quota earmarked them if needed to keep the yields down. Equities markets reactions will be a key determinants of the impact of this move in global rates on FX. Anyway, you can see, getting back here, here's that POC at 31.80, yesterday's POC from the regular trading hours. And you can see this is where we ran out of gas. Let's go and move this back here. Right there. I had it marked as 31.79, but 31.80, 31.79, no, 31.79. So you can see it right here. So you can see where the market went to that area and got just above this level here, and then we faded back. We're kind of making a return trip. And then the previous day, same thing here, 32.03. This is actually where they ran out of gas yesterday on this return back, which was also 50% back, and then we faded pretty hard. A little bit of surprise, though, considering the 10-year yields were actually, on their lows at the time. I'm not sure why that happened. On this says we can take a look at Bitcoin. Sure, one moment. Yeah, this is doing very, very well here with Bitcoin. We did take this dip here on the backdrop of when you saw indexes pull back, which once again surprised me because 10-year rates were on their lows yesterday, late in the afternoon, and then we just started slipping. It was kind of a bit baffling. But you can see here we've made this move higher. I did see there was a report some brokerage firm was reaffirming Bitcoin, so that did provide a little bit of support yesterday. So it just seems like at this point now it wants to make this move. Here's the key level right now. If you actually drop this to right here, right there, 52,000. And that will be key. If we can get two consecutive, this is a 2-hour chart. So if we can get two consecutive 2-hour closes above 52,000, that will really open the door for this to move higher. Still surprising. We're still trading in this range that we've had this big move down here to 44,000. It actually dipped down to almost 43. I thought we'd get down to 42 to kind of clean some people out from here. But we've held up, and like I said, the key will be if we can get two consecutive closes above 52,000, then we can continue that move up. Let's go and move into and Amir wants to take a quick look at platinum. Well, we've just held our own. Really, there's no change in platinum. It's the same as it was yesterday. We talked about that. And the need to get up here to 1242. And you can see here, there was a risk that we could have dipped down here to 1136. We saw the market basically close in a very tight range. And what they'll be doing is trying to work back towards 1242. Still got some work to do, but that's where the resistance is going to come up, is 1242. And Didier wanted to take a look at West Texas Intermediate. We said it looked like a sell on the other day. Nobody's talked about it since then, but that was actually, turns out to be, that was the top right there when we were talking about it. We talked about that. I think we may have been looking at it on a 2-hour chart. I don't remember. I was saying if it crossed over. I remember saying as long as it doesn't get above 63.12. I remember that. As long as it doesn't get above 63.12, you're okay. And there was that level, 63.12. I guess we were looking at it on a 2-hour chart. Let's see, was it here? Let's see. There we go. Look at 63.10. I go, as long as it doesn't get, we were right here. And you asked me, I think it was trading at 62.89, if I remember correctly. Yeah, 62.94. What a hell of a memory. But anyway, we were trading up there, and I said, yeah, it looks like it's in a, right now it's breaking down. And I think at the time I said, if we break here, then I go, the key thing is if you're holding if you want to get short, you do not want this thing to get above 60. There you go, 63.12. You do not want to get above 62.12. And the rest is history. Then we really broke them hard. I think we looked at it on the 30-minute, if I remember correctly, because I was talking about using the moving averages. if I remember correctly. And I was saying about using the 927. I think we're there. Let me see. I guess we're up in here. I don't remember. If you look at it on a 30-minute, resistance comes in at 60.46 right now, but look at it on a 2-hour to get a little bit better handle. You can see the support coming in right there at 58.92. There's some resistance here at 60.92. Looks like the key is going to be right there. 60. Well, there you go. That's where they rallied to. You see that? Using the bodies, they went to 61. That's right there, 61.12. And that's where they rallied to. They got just a hair above that 61.12 there. See right there? And then they rolled back over. Key on a very, very short-term basis is right there. Because you see that wick here? So if they can get a 2-hour close above $60.25, that will knock out, that should stop the bleeding, I would think. Looks like it's right at $60.28. Right there. That'll neutralizes the downside. If we can get a 2-hour close above that, and then might have to start reset itself. And then the next real challenge, if we do get above it, would probably be right there, 61.75. But this is a pretty good ride on the way down. Time to go and move into there we go. Take a look at this yesterday, because we had someone had actually said that they had got short around this area here. And I was saying, well, that didn't make a whole lot of sense if you look at the profile, because you can see here, this was the profile from the day before, not yesterday, but the day before yesterday. I guess would have been Monday. So you can see here, once we got above 2048, when there's a point of control, we were able to go and start marching higher, and march higher we did. And if you look at the resistance, you see this value area here. This would have been Friday's. That came in right there at 20.95. So this market still had the potential to go on. Now, right now, this is just showing regular trading hours. That's why you're not showing right now. But someone was talking about exiting. I was like, well, I'm looking here. There's resistance there at 20.95. We did get here today at 21.07. This would be the key on the way back if we were to reclaim 21.23. Then you would see resistance moving up there, which would kind of make sense with the 21.19. But that was the take on the euro. And that's on the futures, but I think the futures are trading pretty close to where the cash is at already. Actually, I think they're trading the same. We should be rolling pretty soon, probably by Thursday or tomorrow, rolling into June futures. I think we're still reflecting the March futures. Anyway, that being said, let's go and move into the euro. We did make this little pop up here, and let's get into the daily. So the euro reversed from early morning losses to close at session highs. Resistance for Wednesday would be 21.19 with support at 20.35. Here's our 21.07, and they got to, you can see right there, they got to 21.08. I was almost going to leave that here, but I thought, well, considering how strong they closed yesterday, I really got to kick it up a little bit higher. I didn't think I should move it all the way up to 21.31, so I came up with 21.19. So, and supported 20.35. But if you looked at the profile, you could see where resistance would come in at 20.95. And not necessarily for today, but yesterday was moving higher and moving into the Asian session. So you can see that 20.95 made sense. Take a look with the cable. Now, cable found support at the bias chart level of 38.53. Remember that went right to the pip. Before recovering to close above Monday's settlement price. Resistance for Wednesday will remain 40.14 and support at 39.01. So you can see this one we hit right to the pip. So it's going to be 39.01. And on to the Aussie dollar. The Aussie posted consecutive positive closes to start the week to settle just above 78 cents. Resistance on Wednesday will be 78.53 with support at 77.62. Onto the Kiwi. The Kiwi closed positive for a consecutive day, for consecutive days. Resistance on Wednesday will be 73.39 with support at 72.38. To the dollar CAD. The dollar CAD closed with a small-legged doji. You can see here. The pair is indecisive. Support for Wednesday will be 25.78 with resistance at 26.87. And onto the peso. Peso closed lower on Tuesday, sub 20.62. Support for Wednesday will be 2045 with resistance at 2077. So no changes here. On to Dalian. Still holding up really well. Dalian found resistance at the bias resistance level of 692. The high for yesterday was 693 at the time. Resistance on Wednesday will remain the same at 692 with support at 621. On to the dollar index. The dollar index pushed above resistance at 91.20, and that was our bias chart resistance 91.20, but found offers into the 91.40, closing ultimately sub 91. Support on Wednesday will be 90.44 with resistance at 91.12. On to the cross rates. So we had a little bit of a little hammer here for dip, but the dip wasn't very much though. Resistance is going to be the low for this day. That's going to be 78.17. And the low, support's going to be right there. 76.94. Onto Euro Pound. This is just doesn't know what the heck it wants to do, quite honest with you. I'm just going to leave it as it is. 86.12, 86.91. I don't know what the heck it wants to do. We're just in no man's land, dead in the water. Onto the Euro Odd. Doesn't look much better. You can see here yesterday, real tight range. Today, we're almost not even moving. On an ultra short-term basis, that would be it right there. But let's see, just below that, which would be, I don't think it'll go that low. Anything's possible, but I'll go right there with, right there, 54.01. And on the upside, you can see the opening here coincides with that high almost. You see right there. This is called 55.33. Euro Kiwi. Not sure what happened in here. In light of that, we'll just keep it the same. I don't see any need to change it here. Trading fairly quiet overall on some of these pairs. Look at even the Aussie yen. Look at that. Everything's just real super, super quiet. On the upside, we had 83.40, which we're above that right now. So we'll go with this high wick right there, which is going to be 83.78. Especially how quiet it is, that'll provide a little bit of a cap. Take a look on the 2-hour chart. Right there, 83.04. Onto the guppy. Resistance can be right there. 49.63. Support is just going to be yesterday's lows. 48.08. And lastly, with the starting on. Same thing. This thing is just, everything just seems to be just dead at this point. I don't know if it'll make it up there, but that would still be resistance. So we're going to keep the 79.79. And on the low side, we've actually worked a little bit lower. I wouldn't expect a lot of follow through. So if you look at these wicks just below it, the lowest wick right there is here, 77.86. And there's the boss chart complete. And we'll just take a quick look at where gold is. Still hugging near these lows. Copper has tried to move back up a little bit. As I mentioned previously, the 10-year note futures, interest rates have played a big part, and a bit surprised. Like I said, here we were yesterday. Actually moving higher. We actually moved to new highs, which was going to be lower or lower lows in here in rates. And we actually saw indices sell off. So I think we're almost kind of like in a Jekyll Hyde type of situation where markets aren't sure what they really want to do. And I think it makes it a little bit difficult to trade indices at the moment. You have to be careful. Going back to that. Here we are on a 4-hour chart. We would need to get a 2-hour close above 31.86. You can see that's where they ran out of gas earlier this morning. You can see here. I talked about that POC here, 31.79. You can see that's where they closed. And we dipped back, but we're kind of like all over the place. We actually recovered. We came on the air after just dipping down here. We recovered back up here to this 31.83. Only to turn around and come right back down again, and we're just middle of the road in it. But that's all we have for today. Thanks for joining us here in the European Crossover webinar. We'll see you in the chat room.